Hello and welcome to ET Markets PMS Talk. Well, my name is Shatajanand and today we are speaking with Pawan Baradia, who's a co-founder and CIO of Equitree Capital. Now, in this podcast, we'll be discussing markets, valuation, small and mid caps, and why tourism could be one of the most compelling multi-decade investment themes. Pawan, thank you for joining us.
Thanks, Shatish, for having me over. Pleasure to be on the show.
Thank you so much for taking the time out, Pawan. And well, let me just quickly start off with the market. And we are towards the fag end of the year, I could say, for 2025. And despite volatility, I think we should be closing the year with single digit positive returns. So, how are you sort of looking at markets and challenges that could pose a threat in 26?
So markets are at a very interesting juncture, Shatish. We're seeing the Q2 numbers coming out, which have
Sure.
been fairly encouraging and more broad-based than what we saw in Q1.
Mhm.
Uh, Valuations have seen some bit of correction over the last 12, 13 months.
Okay.
We still have the geopolitical issues which keep cropping up every now and then, hoping to see a positive end to the Trump tariff thing coming up.
Okay.
If these things fall in line, then probably I think we are slated for a very good 26 to coming up with.
Absolutely.
Let's see.
And absolutely. You want to add something more, Pawan, to that?
Yeah. Go ahead. Go ahead.
Absolutely. And let's quickly talk about your PMS as well. In fact, it has crossed 1,000 crores a year recently. Many congratulations on that. And, when you sort of look back to 2012, what were those early days like when it was just, two hostel friends starting out?
Thank you so much for the compliment, Kshitij. And it's actually living a dream. We never had a business plan to get here to begin with.
Okay.
When we set up ourselves in 2012, it was more to just have fun as friends
Mhm.
together. The idea was that we'll take the whole private equity approach to investing into small and mid-sized companies.
Mhm.
That's what I started my journey with. The idea was to professionalize investing into the so-called microcap segment.
Absolutely right.
Now, of course, the journey has been extremely volatile, where the conviction got tested enough and more
Mhm.
times, more particularly in 2013,
Mhm.
2018 to 20. But that's been a huge amount of learning as well. I mean, today when I
Mhm.
reflect back, I think there's been a huge amount of learning curve that has gone into.
Right.
What's usually satisfying is that what started as a small, kind of a prop family desk,
Mhm.
today we
Mhm.
have the trust of more than 350 families
Okay.
and partners alike.
Right.
From a single team, today we are close to about 20-member team, and that's hugely satisfying.
Mhm. Absolutely. And yes, and plenty more to go. I mean, the journey is just started for you, Pawan, and wishing you all the very best for the new trajectory now, because now you're in the bigger game. You could say that.
Thank
Right.
you,
Coming
thank you.
back Coming back to markets, Pawan, so let's talk a little bit about the valuations. Nifty 50 sort of lacking behind Wall Street, could say that, because which hit record highs earlier. But fears of shutdown seems to be the next headwind. How are you looking at Indian valuations? Are we still pricey?
So the way we look at the valuations is rather than looking at the broad-based indices, we slice down the markets into the large cap, mid cap, and even within the small cap, trying to slice it between the 251st company up until
Mhm.
5,000 crores, and then below that 5,000 crores, largely looking at 1,000 to 5,000 crore market band. Interestingly, it's the mid cap where the valuations are still on expensive side. If you
Okay.
look at on a Q1 basis, it was at about 52 times on a trailing 12-month basis. And
Mhm.
that's
Mhm.
like almost close to about 46% premium to its 10-year average. Small caps are not far too behind. Even if you look at the 251st company to
Mhm.
up to 5,000 crore, they
Mhm.
trade close to about 32 times in terms of valuations,
Okay.
which is at about 28% premium to its 10-year average.
Uh,
Interestingly, the 1,000 to 5,000 crore band, that's where we generally look to focus on. That's
Right.
trading close to its 10-year average at about a
Okay.
24 P multiple on a trailing 12-month basis. And
Mhm.
most interestingly, that's a segment which has been delivering a lot of growth. We're
Okay.
yet to see Q2 numbers in totality, but
Mhm.
Q1 showed more than 50% of the companies in this band, 1,000 to 5,000
Mhm.
crore market cap, reporting more than 15% growth.
Okay.
So you have a situation where the companies are delivering growth, the valuations are close to their 10-year averages. I think one can't ask better than that.
Absolutely. In fact, my next question was also around what small and mid-cap space. So, should investors sort of approach with caution when they are, dealing with this segment?
Yes, of course. I mean, so depending on the segment where you are, if you are in the mid cap bracket, valuation
Mhm.
still remain elevated over there.
Sure.
If one is looking at the small cap, which is above 5,000 crores up until the 250 first company, there
Right.
again the valuations are slightly on a higher side, I would say.
Okay.
Even in our genre, while the valuations remain robust and growth is there, but I don't think still there is a market to be exuberant. We're still
Okay.
not out of the woods. I think
Right.
some of these geopolitical issues will keep cropping up, and which
Right.
is why one needs to build up on the portfolio.
Absolutely. Let's a little bit talk about the primary market space. So there's plenty of noise around the new IPOs hitting the street and frequent fundraising which are happening from new age companies. So how should investors sort of evaluate those opportunities?
Well, we are not really the experts to be looking at that segment of the market. In
Mm,
fact, most of the IPOs have actually been offered for sale,
mm,
where
mm.
either the private equity investor or the promoters themselves are looking to cash
Right.
out. And that's not a segment that we generally look to invest into. I mean, the way we
Mhm.
look at our investing, we're probably more comfortable buying into businesses which generate large amount of
Mm.
free cash flows, and they
Right.
don't need primary capital for growth. I mean, those generally end up being far larger wealth creators and sustainable wealth creators at that, than the
Mm.
ones which are actually burning. And of course, there is a market out there, and the kind of valuations that they're fetching is
Sure.
dramatic. But we're not in that segment, honestly.
Absolutely. Now let's talk about the segment that you are in, or probably you're looking more from a decadal investment opportunity. So in your newsletter, I think you did mention about the tourism sector. So why could tourism be a multi-decadal opportunity according to you?
Indian tourism, I think, is going through a massive transformation,
Okay.
thanks to the kind of connectivity improvement which has happened, whether it is railways, roads,
Mm,
airports. I mean, it's interesting that airports have more than doubled
mm,
over the last 10 years and
right.
projected to still continue growing up until 2030.
Okay.
Again, likewise, look at railways. So you have about 1,300 stations which are under redevelopment.
Mm,
99% of our 69,000 kilometers has been electrified.
right.
Vande Bharat has been a game changing experience again. So that
Mm,
connectivity is actually gearing up in terms of tourism.
mm,
As we look at it today, tourism contributes about 6% of the GDP, and it
mm.
has the potential to go up to 11% of GDP by 2030.
Oh,
More interestingly, this is not getting fired only because of inbound tourism, where you have the foreigners coming into India. It's the
sure.
domestic,
Right.
residents as tourists, which is
Mm,
equally firing this sector.
mm,
And tourism has a huge multiplier effect at that.
mm,
So where there are direct beneficiaries, of the businesses, we are more focusing on the indirect beneficiaries of this entire value chain. There, the valuations remain far more reasonable, so to speak, than the ones which
mm,
have direct benefit out of this thing. So we strongly believe that this is one sector to watch out for.
mm. Absolutely, I'm sure our viewers would take note of that. Tourism is something which investors can watch out for. It's a decadal opportunities or multi-decadal opportunities at this point in time. Stay cautious on the small and the mid-cap space, and yes, valuations look a little edgy at this point in time. Pawan, on that note, thank you so much for sharing your insights on the markets and particularly the structural opportunity in tourism. It was great having you on Eating Markets PMS Talk. Thank you so much for your time,
Thanks.
Pawan.
Thanks, Paresh, for having me over. Pleasure talking to you.
Thank you.
Thank you.